Most small business owners don't fail because of a lack of passion. They fail because they're running blind. I'm Mark Andersen, and I help small business owners make data driven decisions using the information from their accounting records. My mission is simple. I want to make a dent in the small business failure rate by teaching you how to use your finances to make better decisions. Welcome to Business on the Run. Hey, welcome everybody. Business on the Run with Mark Andersen. I have Natalie Picha with Royal Harbor Partners, a wealth management organization here, right off of the Ellington, or you're on Ellington base, right?
Right. We are at Ellington, which is now Ellington Airport, right? And it's part of the spaceport.
And very close to the Lone Star Museum.
We are catty cornered. We're catty cornered to the Lone Star Flight Museum. Royal Harbor Partners is what we started out. We're also known as RHP Wealth Management. And right here in the South Houston area. And thank you so much for having me today.
Well, thank you for being on the show. I really appreciate it.
Absolutely.
So, Natalie, tell me a little bit about your origin story. I mean, I know that you've got a background in finance that goes all the way back to you probably just right out of college. So tell us the story.
Well, I can't say that it was finance right out of college. I do have a really interesting journey that I took to get where I am today. But I think what I really like to start by telling people is RHP has become one of the quintessential wealth management firms in the Clear Lake area because we care about generations of people, and it's really important to us. And so I'm very proud to say that myself and my partners back in June of 2019, just prior to the 2020, right? We left Merrill Lynch Bank of America to start RHP Wealth Management, really a boutique, registered independent advisory firm with a purpose of empowering our clients' lives and really empowering families to do whatever it is they want to do in this life. Not just accumulate wealth, but actually use their wealth to do something important. And so I came to that because of my background. Early on, I'm a born and raised Texas girl, small town, preacher's kid, and I was married very young, had three small children very early in my life, and found myself in a place where I didn't necessarily control my finances or understand where my finances were or what my options were. So as I navigated that space as a young and single mom, I found myself wanting to be more educated and understand what is it that women need to do to be independent in their financial lives. So that's sort of a passion for me to really get out there. I've done a TED Talk on that. Um, yeah, I've done a TED Talk on that, really just empowering women and educating them on the financial side. But our firm really is about generational wealth. So we've got a lot of families that we're now proud to say on the third and fourth generations. And when we work with clients, we say this is a lifetime commitment, and we understand that we are going to work with you until you're gone. And then our job is to make sure that we continue whatever legacy you want to leave onto that next generation.
Very cool. So the TED Talk is actually specifically about women.
It is.
It was done here in Sugarland, if I'm not mistaken.
That's right.
Here in Sugarland.
Yes. So it was TEDx Sugarland, and it was an opportunity that was brought to me by our now director of operations. And I was really surprised that I made the list, and I was really excited and then very nervous, of course, But it was an awesome opportunity to get the message out about something that's now called the Great Wealth Transfer. So that is already in process. And I'm not sure that everyone really understands what that means. But as the baby boomers age, what's happening is we're seeing a large amount of wealth transferred specifically to women. Women live longer. They tend to be the caregivers in the family. So you're seeing daughters, wives, sisters. I'm even seeing that in our practice, inherit large amounts of wealth in a space where they never ever opened up any sort of an investment portfolio or financial plan, and really they're scared, right? And for me, it's all about confidence. You don't have to know everything about everything, but you need to be able to make some decisions from a place of confidence. Um, if we take all of that wealth, trillions and trillions of dollars, that are in movement right now in this great wealth transfer, and we put them under a mattress, it's not going to be good for any of us, right? So my hope is that the message is that know where your money is, know what it's doing. I always tell people, please don't have lazy money, right? Have your emergency fund well funded, but don't have lazy money. Always tell your money what to do, and make sure it's working for you. So part of my TED Talk is all about hoping to empower women and give them some confidence to step into this role that they're going to have, which is, like it or not, they will be the financial managers of their households, likely at some point in the future.
Tell me about some of the challenges that you and your team have experienced with regards to your business. I know obviously COVID was probably a huge challenge,
Well,
especially starting the business around that time, right? But
well, that's interesting. I think that's what everyone expected, right? We started the firm in 2019, just about 6, 7 months before COVID really hit, and a few months after that before everything really shut down. When we started the firm, we set out to have the best technology platform that we could possibly have. We also wanted to be completely independent so that we could be nimble. So if you know my partners, so Glenn Royal is our chief investment officer. My other partner, Michelle Jones, she's our chief wealth management officer. Both of them with decades of experience in the business. When we started the firm, we wanted that level of independence and what I call movability, flexibility, nimble, just being nimble. And Glenn, with his 30, 40 plus years of investment experience, we had made some pretty bold decisions during that time, which was a great benefit to our clients because we were able to move and to make very strategic, bold moves, if you will, during that time because there was opportunities, right? We were also, because we were nimble, a lot of the larger banks and institutions found themselves trying to move an oil tanker, right? And
you're a speedboat.
we're a speedboat. We were just making those moves. So actually, it was stressful, of course. I don't think anyone could say they didn't get through that period of time without a little bit of stress, right? But it was actually good for our firm and for our clients.
I know that for us anyway, unfortunately, we did see a number of clients go out of business during that time, which was unfortunate. I hate to see that sort of thing, but it's those that were just, they failed to be prepared for something.
Right.
Like you were talking about the emergency fund earlier, right? They didn't have one, right? Those were the businesses that went down, and they weren't able to, take advantage of some of the COVID benefits that were out there, like the idle loans or some of the other grants that they had out there. But anyway,
Well, I always say when you work with a team like ours, our job is to uncover all of the gaps. It's also to look for all of the opportunities. So to what you're saying, we do a lot of tax strategy. We talk a lot about how is the business structured. We talk about, by the way, thank you very much for being on my podcast at RHP Mark
it's a lot of fun.
last week. But on that podcast, we talked about margins and knowing your numbers, right? In the same way, as financial advisors and wealth managers, we're all about showing you your numbers, right? Not just your margins, but we're also talking about that emergency fund, and we're talking about what's going to happen 6 months, 12 months, 24 months down the road. Let's talk about these things and plan for them. And then I always tell people, it's not a matter of it's not a matter of if something's going to happen. It's just a matter of when. It is going to happen. So we talk about things like death because it's coming to all of us at some point. Health events happen. We want people to be as prepared as they can be because then when it happens, we have options.
Are there any, I guess, personalities or books or any resources that you kind of gravitate to kind of help mold your business journey? Like, do you have a favorite business book, or is there someone on social media that you enjoy following?
Oh my goodness, that's a big question. I think there are so many.
I agree. I've got a lot myself.
There are so many. I don't think I could narrow it down to only one, just one voice, because there are just so many.
Who are your top two or three?
I have like a stack of 10 on my desk right now. can't do a top 2 or 3.
You don't have to rank them. Just give me 3.
Gosh, I don't.
You want me to give you some of mine? Tell you what, my favorite book is Good to Great, Jim Collins.
Oh, that is a good one.
I love his book. I love his stuff. One of my favorite concepts, and this may sound harsh, but in reality, it's really not. And we actually chatted a little bit about this. Was to hire slow, fire fast.
Yes, right.
I would say that is so hard to do, but it is such a big money saver for you. Not to mention, it is best for everybody, right? It's best for your business, it's best for your team, and it's best for the person that is leaving too, because then they get to really, it's not going to work where you are.
Right.
They get the opportunity to find what their passion is or where their better fit is. Another one I really like is Alex Hormozy. You don't know Alex Hormozy. You need to look him up. He's really good. I flew to Vegas to watch, to go through their
Oh, okay.
really, really cool event. And then what's another one? I love Dan Martell, Buy Back Your Time.
No, I haven't read that one either. Yeah.
There's another one. So kind of the overarching concept for Dan Martell is like, if you can, in order to really maximize your output, you've got to know what your hourly rate is.
Right.
And if you are doing something that is beneath your hourly rate, you need to be hiring someone to do that. And it's one of the reasons, and I know I'm going to get in trouble for this, because I'll give you a perfect example of my house is having the yard mowed, right? I am not ever going to mow my yard. My wife has asked me,
Absolutely not.
can I buy a lawnmower to mow the yard? And I go, well, no. And here's why, for really a couple of reasons. I don't want to do it because it's below that hourly rate.
Right. Absolutely.
And if she did buy that mower and she's out pushing that mower, I'm going to look like the biggest jackass in the world. Am I right?
Right.
So look at him making his wife mow the yard. So never gonna happen.
Right.
So anyway.
Well, we always say put your resources in the right place. We also tell our clients very often, when we're diversifying the portfolios and we're helping you kind of right size according to your financial plan, we are not, as particularly for our business owners, our job is not to try to make more money than you make. Our job is to take that off of your plate. So that's not what you're thinking about, because if you're running your business well and your business is doing really well, you're going to make more money than we'll make in the investment portfolio. Our job is to keep it diversified and keep you on track, right? And also take that burden off of you, so that your brain can concentrate on the thing you're really good at. Again, going back to that hourly rate, we want them doing more of what gets them the most hourly rate. We're set up in such a way as an independent and a fiduciary, a fee-only firm. What that means is we sit on the same side of the table as the client, meaning when they do well, we do well. So it makes no sense for us to just try to gather assets. We want those assets to be in play. We want them to get used because we want everyone to do better. We want everybody to reach their full potential. So put your time and your resources in the right places.
Let me ask you a question. Particularly like with the whole war that's been going on right now and all of that, I mean, clearly that creates a tremendous amount of uncertainty. I mean, gas prices have been going up and then down, and stock market same way. I mean, tell me a little bit about how RHP navigates all of that with clients.
So, first and foremost, we believe that the client is the center of the story. We always say, you're the hero, not us. We want you at the center of the story. We want to completely understand your value system. We want to know, what are your fears? What are your hopes, your dreams, all of that, right? That helps us get a really good understanding of how you're going to feel about markets this year. Then around that, we're building a financial plan that helps you understand that you're not out to try to shoot the moon. We're not looking for 40 and 50 and 60% returns. That would be great, but we're not willing to take that sort of risk. We want something that's going to be sustainable and consistent over long periods of time. So when people start to get, it's been interesting this year because it has been a very volatile year. I mean, every day, especially if you're listening to the news, which I'm not sure I recommend anymore, just don't listen. It's not even news. Exactly. That's a whole other topic. But what we find is that emotional up and down really has very little to do with what's going on with your investment portfolio. That's just the emotion. That's the roller coaster. I always say, please don't jump off of the roller coaster in the middle of the ride, right? Because what you'll find is, had you gotten out of this market when this war started earlier this year, you would have lost, right? Our job is to help you just look at the data points, look at what you need as an individual for a longer term return to have a successful plan, and to just keep you on the roller coaster, right?
So I think that's kind of interesting because when you use a roller coaster analogy, I'm thinking naturally, if you're going to jump off the roller coaster, you're going to do it at a dip, aren't you? When things are at their lowest.
Yes. So yeah, and back in 2011, we found, I mean, as a team, we were seeing people come in, never, they were not clients, they were prospective clients. They would bring their statements and they would say, okay, I went all to cash in 2008. Now I'm ready. I've gotten over the hiccup. I'm okay now. Now I'm ready. They missed the rebound. They missed the comeback, right? And they're like, okay, now fix it. So what we do as active portfolio managers is we do move. And so I always tell people there's 4 stages of an economic cycle, right? We have contraction, we have growth, we have downturns, we have to navigate all of that. COVID was a perfect example of us navigating that, because you still bought toilet paper and you still bought toothpaste. So it's more about making the right moves at the right time. I always caution people, if you've been sitting in cash for a long period of time, more cash than is really needed for your emergency fund, you've probably, well, first of all, you've not kept up with inflation, first and foremost. And over long periods of time, you're missing the growth in the market. It's very hard for people to wrap their brain around. We now have 99 years of market data, right? 74 of those years we have been up in the market. 74.
Good numbers.
25 we've been down. So 3 out of 4 times we're up, 1 out of 4 times we're down. But the down has a bigger impression on people. We want to avoid pain. We all do. That's human. We just want to avoid pain. So if anything, I think our team works really hard to make sure that people get a sense of the markets aren't always up, but all we need to do is this in order to make sure that your plan can be successful.
Well, you mentioned kind of what was it, 2008, 2011 time period, I guess. I've got a kind of a fun story with my son on that, because I remember, I want to say it was his birthday or Christmas or something like that. And he was so mad at me, so mad, because we took his Christmas money that his grandma and grandpa gave him, which was somewhere in the neighborhood of $500.
Nice Christmas gift.
I know, right? And I said, we are not going to blow that money. He's like, but Dad, I want an Xbox.
Oh.
We're not doing that.
How old was he?
We're going to do, I want to say he was like 11 or 12.
Oh, yeah.
And but here's what we did. I set up an E-Trade account for him, and we bought, was it 50 or 100 shares? I don't remember, 50 or 100 shares of Starbucks.
Oh.
It was trading at like $6.50 or $7 a share at the time.
Wow. Okay, now this is a technical question here. Why Starbucks?
Because you know what? It could have been a dart throw, but more than anything, I wanted him to have a physical understanding of
Okay.
what it was.
So he knew.
Gone to Starbucks. I went to get coffee there. It was something he could relate to. He would get frappuccinos or whatever. So it kind of had a tangibility to it, and he could follow it. So when he drove by Starbucks, I was wanting him to go, I wonder what my shares are worth now, right? That was kind of what it was. It could have been Kroger, but that wouldn't have been as fun.
So we would give you a big gold star as a parent, because that for us, we start talking about, and we talk to the children of our clients and grandchildren. Start early, have these conversations early. Please don't make money a taboo subject in your house.
Absolutely. But we ended up selling it at $70 a share, around 70, 72, something like that.
And how long did that take? And what was his response?
It was 6 or 7 years, and he was very thankful about it, because at the time he wanted to take those funds to buy a vehicle, and I'm like, let's do that. That worked.
That works.
When you think about that, right? You could have gotten an Xbox way back here in 2008, but we took that $500 and we bought a truck.
That is a wonderful story. That's a great story. Yeah.
I kind of like that. So
And you rode some waves with Starbucks too. There were times that it was up and there were times that it was down, right? That's a great story. I think what's also near and dear to my heart when we talk about that is, you know, legacy is not just about money, right? We talk about goals and hopes and dreams. If someone comes to me and says, "Well, my goal is to have $10 million," I say, "That's not a goal. That's a number," right? Numbers are not goals because you can have $10 million and you can be miserable. And you can die with $10 million and have done nothing. And I have seen that happen as well. But when we do start talking to our clients about legacy and passing on to the next generation, we have the tools to actually do some things like that. So we'll talk to clients about family limited partnerships or maybe even doing private foundations. We get into generosity because, you know, with much, much is expected. And so you'll see people really start to lean into, oh, I can invest this money. I can invest this money and I can use some of these proceeds to make the world a better place. I can create funds that their whole job is to do nothing but support maybe the causes that they are very passionate about.
have you ever heard of Andrew Cordell? Okay. So he's a wealth tax strategist, and I love his philosophy about money. I wish more people thought about money in this way. And I got to see him speak at the Aspire Tour. Have you heard of that? They run a big event that travels across the country. Very really cool event. And when he spoke, and he would interview people as part of on YouTube as well as like at the Aspire Tour, and he would say like money is blank to you, right? Yeah. And I thought that was a great way. But basically, it's like it's not the money itself, right? The money is just a
It's a tool. I just say money is tool.
yeah.
How do you want to deploy the resources?
And it also kind of reminds me, I went to, my wife is the HR director at Dickinson ISD. And I got the opportunity to actually go to one of their career days where all the kids, I want to say it was like third through fifth grade, one grade at a time came through and talked to all kinds of other business owners, firefighters, whatever, right? And I'm going, okay, what am I going to do? I mean, I'm accounting. How am I going to frame this conversation to third graders, fourth graders, and fifth graders, right? So what I did was I thought it was a lot of fun. I had some cool flyers and stuff, and didn't buy nearly enough of it. By the time the first grade came through, I was out of everything because they liked it so much. But every time a group of kids came up, I would ask, how many of you guys love money? How many kids do you think are saying, I don't?
Right. There's yeah. Every hand went up. Yeah.
So we said that's a natural segue into entrepreneurship and all of that, right? I will say one thing that was a little bit saddening to me. There was one little girl, and I don't think I'll ever forget this. She was like, I don't like money at all because my parents struggle with it so much. And that just broke my heart.
Yeah. So, that's another part of working with a team like ours. When I say removing the emotion, just data, money, we all have baggage around money.
Sure.
I've seen it at the ultra wealthy side. I've seen it on the other side. Um, Growing up in a household where money was really not talked about, and you shouldn't talk about it very much, not a wealthy family was very difficult. But I know wealthy families that never talk about money, and you should never ask, ever. It comes with a lot of emotional baggage. So sometimes I say we always keep a big box of Kleenex on our conference room table because we're money therapists. Sure. Really, at the end of the day. And we also have to work through some family dynamics. It breaks my heart to think of someone who will probably go through her life with this scarcity mentality of never having enough. And that can really hang people up sometimes and really keep them from moving forward. Yeah.
Yeah, there's definitely some emotional issues with, behind money.
And it really comes out sometimes in a married couple. So get married and then start talking about who gets to spend what where.
Yeah.
Interesting. You were talking, we talked about your TED Talk earlier, and I don't know why that just popped into my head. I guess it was you were talking about marriage, and naturally, when you talk about marriage, divorce is the opposite end of that, right? Can you talk a little bit about I guess the wealth management side of divorce? I'm certain that must have happened with some of your.
It does. It happens. It's another place where I can actually say we're very proud of the fact that we have navigated divorce for some of our clients and actually kept both clients in the end, right? Just keeping privacy and understanding that everything is independent, and going through that process and really, again, just using data, just using the data, the numbers, and making sure that we're supporting both sides and doing what's best once everything is separated. But it's never an easy place to be. Um, the other thing that where things can get sticky in that sort of situation is inheritance, because when someone passes away and leaves, let's just say, for example, someone leaves your money, your wife, a large amount of money. Um, Technically, as inheritance, that is her money. Now, she can choose to make it a joint asset or a you know, Texas is a joint property state. She can do things that will, of course, make it immediately both of your asset. Um, but she can also decide not to. So navigating that space can sometimes be a little bit tricky for people emotionally. Um, Also, blended families. I think blended families become a place where we really have to work hard to make sure that everyone's wishes are getting taken care of. Most people want their spouse to be taken care of if they pass away, but if there's his kids and her kids, there becomes some conflict around, well, then what happens if there's the second spouse passes away? We want to make sure. So how are all the children treated, and what's the equal, and what if mom or dad gets remarried after that first spouse passes away? Um, that's why we highly, highly encourage families to work with a good estate attorney, and we like to be in that conversation. So we work jointly. We work jointly with them when we're going through that process.
So, tell you what, as we start to wind down our conversation, Natalie, tell me what the top three things that, say, someone that's new to, the whole wealth management issue, if you will, um, what should they be doing at this point?
So first and foremost, know what you own. I am consistently surprised to find that people don't know or aren't tracking where all of their accounts are, how they're titled. Are they just in your name? Are they in your spouse's name? Um, they just don't know. So know where all of your accounts are. So first and foremost, know what you own, know what you owe. Once again, people don't always know where everything is. They're just not tracking it. It's so easy. Life is busy to get caught up. So first and foremost, just know, and much like what you said, know your numbers. Similar, it's know your numbers, but know your assets, know your liabilities, and know how they're titled. Secondly, know who your beneficiaries are. And I know it gets said a lot, and yet people still don't do that consistently. You have to review them. You have to review them once a year minimum, twice a year if you've had any sort of life events, at least. Because time and time again, I tell the story of the husband passes away, he's married, second wife, and never changed his beneficiary. And that wife has an expectation that she's going to receive his pension. But lo and behold, it's going to his ex wife. That was never his wishes. But the will doesn't change that. It's a set in stone, it's done. Uh, Please, please, please check your beneficiaries and do not make a beneficiary a minor child. Now it ends up in court, it gets tied up, and it's a mess, right? So make sure you're thinking along those lines. And then thirdly, work with a financial advisor. I mean, studies show that having a good plan in place, a written plan, will make you more financially successful than just leaving it to chance. So, I mean, a plug for us for sure, but we love to be able to show people their financial plan, help them execute that plan, and then look back over 3, 4, 5 years and see the success because we've implemented a plan and we have executed that plan.
One thing I wanted to there were a couple of things that kind of came to mind as you were talking about all that, and The one thing that I will do periodically for our clients that borrow money from banks for their businesses, inevitably they've got to provide personal financial statements to the bank, and I find that to be a great vehicle for maintaining exactly what you were talking about, where all of these things are.
Well, we do. So part of the financial planning process is to create that net worth statement. And it's interesting for someone that maybe does it on the back of a napkin or, or even for those that do this complicated Excel spreadsheet, like they go really, really deep, right? And they get in the weeds. We can put that one pager up there and they see it all in one place, how it flows, the energy, all of the assets and liabilities, how things are connected, whether spouse and family inheritance, and you see it all, and it really is a light bulb moment for people. That's one of those things that you should just do.
Yeah, I mean, we don't really do personal financial statements, we don't maintain them for folks typically. We'll do them on the occasion when they need to be. Like sometimes they've got to do them quarterly or something like that, and we'll help with that sort of thing. But it's harder because we don't banks don't allow that third party access to personal accounts, but they do for business. So that's kind of the limitation that we deal with there. But the other thing that you were talking about your plug, right? I'm assuming you're going to probably agree with me when I say that the people, your prospective clients, your ideal clients, or even those that may not be ideal, should not be doing their own wealth management stuff. They should be hiring a wealth advisor.
So what I put to people is, do you want to sit and watch the markets every day, all day long, every time they're open? And which, by the way, there's markets 24 hours a day, right? So I mean, that is our job. I'll go back to what we talked about earlier in that what dollar amount are you earning per hour? Go do what you're good at, right? And take that off. We even call ourselves like a personal CFO because again, it's that second set of eyes on everything, helping you make decisions around data, not on emotions.
Right. And that's the other thing that I was going to suggest there was there's a certain level of emotional detachment with you guys at the helm there as opposed to someone trying to do that themselves. I say the same thing too. It's like every small business owner should have, in my opinion, they should have a CPA helping them with their books, no matter what. And most of the time it's really because they don't have the skills to do what needs to be done, which again is a good argument for having a wealth manager. But if you're not doing it with us, at least do it with somebody, right? So I think that's super important.
Well, and I think, a lot of people do enjoy, much like what you were talking about, where you purchase Starbucks and you hold Starbucks and you're watching Starbucks, right? And that's a great place for someone to start learning and understanding. We had some really interesting meetings just after just after 21, 22, 23. We had some very young, inexperienced investors coming into our office who had made an unexpected windfall in Bitcoin, right? By the way, we don't do that. So please don't call us if you're hoping to get some Bitcoin because we don't do that. But they came in with this sudden windfall of money, all cash. Some of them had already gone out and bought additional real estate. They were going to become real estate investors and moguls, and they did not know they had to pay capital gains. So they suddenly had no cash and
Because they had invested a big chunk of it.
all these taxes, and did not understand the tax implications of what they had been doing for the year. One of the things that we do across very large portfolios is trade with tax efficiency. That's part of our job. In addition to working through a financial plan and thinking about when you should take certain monies as you're living in retirement first. It matters over a long period of time because taxes is still money out the door every single time. And we want to figure out how do you pay the least amount in those taxes over long periods of time. So can you do it yourself? Absolutely, you can. But why wouldn't you have a third set of eyes on it so that you can make sure that it's being done as efficiently as possible?
We, as human beings, we should become better at hiring experts to do the things that we are not experts at.
Right. I promise you, I do not want my husband doing brain surgery on me. You know, he's great at certain things, but that's not his job.
My wife is like, yeah, of course I trust you. It's like, well, you wouldn't trust me to do brain surgery, right? You wouldn't trust me to do HR like you do, right? I know you trust me, but that trust is conditional, right? So you've got to trust people for the reasons that you've hired them, right? Because so it's important to understand that.
And I think all of us have blind spots. And I think if you think you don't, that's a blind spot.
Absolutely, absolutely. So Natalie, let's wrap it up. And the one final question that I have for you today is how, if people are, those that are listening today, how could they get in touch with you guys to work with you?
So please see us at our website at royalharborpartners.com. That's our website. But you can also look us up on our podcast. So we're RHP Market Talk. We are out there on all of the podcast platforms, Spotify and Apple and things like that. So you can always just look up RHP Market Talk and find us or visit us on our website. And we offer initial consultations to just talk through where you are and does it make sense to work with someone like us. And I always tell people, it's an hour of free advice. Why not take somebody up on it? We'll tell you, we'll be very honest. We're fiduciaries and we're independent. So we're going to be very honest with you and we'll tell you if it makes sense to work with a team like ours or not. Everyone deserves a good plan.
Yeah, agreed. All right. Thanks so much for coming on the show today. I really appreciate it.
Oh, thank you very much. I've really enjoyed this. This was wonderful. Thank you for having me.
Great conversation. Just loved it. Thanks a lot for tuning in to Business on the Run. You can find us on Spotify, Amazon, Apple Podcasts, as well as on YouTube. So until the next episode, you guys have a great day.